Joining you here from the Atlanta Fed's conference in Amelia Island, Florida, by President Raphael Bostic, President of the Atlanta Fed. Thanks for joining us.
It's really good to be here. Thank you.
I could do worse than start with Becky's question. I think I've learned to follow her lead a lot. You know, the question of the market is the next move a rate cut or a rate increase, and how will we know?
Well, I actually can't tell you what that's going to be. I mean, from my viewpoint, there are risks out there in the marketplace that would suggest the economy may perform worse than we'd expect, and in that case, there'd be a cut. But there are other risks that would suggest the economy might actually do better. Suppose that the trade negotiations end up in a way that is beneficial for the U.S. economy. We might see a lot of the uncertainty be viewed as going away, which could trigger a lot of investment and really heat up the economy quite quickly.
Let's go through that one point. I mean, that's obviously a broad range of issues, but how does the idea that the trade problem could go away in a tweet or some kind of deal that would be made change your ability or affect your ability to address it?
Well, let me walk you through this.
Yeah.
It will affect, in my view, how businesses view their future potential.
Right.
And when that becomes clear, then the trajectory of the economy will become clearer to us, which will then affect how we expect the economy, or how I expect the economy to move forward. And then that will then, in turn, suggest what an appropriate course for policy might look like. And so right now, you know, when I go around, I talk to business leaders all the time. They tell me, well, I don't know what the rules are going to be a year from now, so I'm just going to wait. And if things go one way, then there'll be this course of action. If they go another way, then there'll be a different course of action. And so right now, I've got to just be open to the possibility that businesses can do either, and that has different implications for what the right course of policy is.
The message you're hearing from businesses is it's putting a damper on investment?
For the long term, certainly. There are a lot of businesses that are standing on the sidelines, just waiting to see how this resolves. And then once that happens, then capital will be deployed in ways that should increase productivity and production.
Let's talk about your base case. I know it's hard to sort of say, well, if this doesn't happen, that doesn't, but if you said, what is the most likely outcome for the U.S. economy this year?
So my base case is that the economy will continue to perform in a very solid way with solid growth. Last year, the economy grew over 3%. My base case is that it's going to grow less robustly than that, sort of on a trend to get back to a long-term sustainable level, which in my model is about 2%, a little less than 2%. So this year, 2.25% to 2.5% is something that I would expect to see happen. And in that space, you know, we should just let the economy do that.
Okay, so a base case outcome requires no response either way from the Fed.
So a base case, well, it depends, right? So I'm an economist, right? So it always depends.
You need both hands and a few more, right?
But exactly. But in general, my view is as long as we don't see inflation running away, that would be the sign that our policy is basically at a neutral level. We can sustain that for a long time, and we don't have to move. So I'm really trying to keep an eye on what's happening in terms of pricing pressures, to see if there is evidence that suggests that we might be providing some extra stimulus in our policy position.
Let's talk about inflation. I mean, one thing we heard was that the chairman believes that the low inflation is potentially transient. How concerned are you about the Fed's long-running inability to hit its 2% target?
So I'm not super concerned about that today, and mainly it's because when you look at inflation expectations, they haven't started to trail away in a significant way, away from our target. It's been the 1.8, 1.9 range. Our target is 2%. If I started to see a trend moving down to a 1.5 or 1.25 for inflation expectations, then I'd be concerned. But right now, I don't view our lack of hitting that target exactly, or even going a little above, as being a material failure.
I've got two more things I want to ask you about. First of all, the market seems substantially priced for a rate cut. I'm sure you watch these probabilities. 50% probability September, all the way up to 87% in January. Is the market offsides here relative to the Fed and your expectations?
Well, the market is ahead of where I am. So I would say I'm not expecting a rate cut to be imminent, certainly not by September. Things would need to happen in order for that to play out. So I'm taking a wait and see action. My view is that people should have an expectation for my approach to this, that I'm open to move in either direction. And right now, I'm not really tilted to the cut side as opposed to the hike side.
Do you worry that the market gets too far away from the Fed and the median expectation of the board?
So I do worry a bit that there is a momentum in psychology that sometimes the data doesn't completely match. Right? And so I try to stay as much as possible grounded in the data that I see and the information that I gather. And the information I'm gathering is not suggesting that we're going to have significant weakness in the economy, which would really warrant a cut in our rate.
When I look at your district, it's every piece, everything that's going on in America is in your district. Tech and banking and agriculture, trade, everything going on. Give us an idea of how the district is doing relative to the U.S. economy.
Well, as you said, our district is a real microcosm of the U.S. economy. We're 1/6 of the U.S. economy, and the distribution of sectors almost exactly mirrors the distribution for the country as a whole. So we really do represent the country, and I will tell you that in my going around, businesses they're confident, they're excited, they're pleased with how things are going. They're not expecting it to go as strong as it did last year, but they're also, I've not heard from anyone the idea that there's a material weakness that's happening. Consumers haven't changed their approach to the economy in a material way. So we're just sailing along in the 6th District, and my hope and expectation is that we will continue to do that for the rest of 2019.
President Bostic, thanks so much for joining us.
It's really been good to be here.
Appreciate it.